Welcome back to Stocklabs. It's time to recap the week ending February 25th. So we're coming off a short holiday shortened week. Monday was closed for President's Day, and obviously all week we had we had some wild swings in the market that a lot of them were dependent on the pretty fluid situation between Russia and Ukraine. That is, no one really knows what's going on. But yeah, the market had a lot of big reactions both ways. And by the end of the week, we closed a little bit up from last week. So it turned out okay, even though it was looking bad all the way up until basically Thursday morning. We got like 1,000-point rally from the NASDAQ on Thursday, and then it held it on Friday, which kept the markets green for the week, barely. But yeah, we pulled it off. Let me go to our ETFs here, just so we can see the exact performance numbers. Okay, so oil's been leading, pretty often, just because it's also tied to sort of the geopolitical risk. Small caps were the top dog, plus 1.38%, just a little bit more than the Qs, plus 1.36%, and then S&P was up 0.8, 0.9, and the Dow was flat, so down 0.8, or 8 bips. Sorry, not 0.8. So looking at this, it looks like it was just a pretty uneventful week, but really the swings were large throughout the week, which was a little challenging. As far as our mega cap tech leaders, that is. Microsoft up 3%, Google up 3%, so okay bounces, even though these had gotten sort of shellacked the last couple weeks. NVIDIA up 2%. There was news that NVIDIA had gotten hacked or something late in the week. Facebook actually had an up week, even though it's sort of been struggling. Well, all of these have really been struggling with the market, but Facebook especially is way off its highs, just due to a number of debacles that they've gotten themselves into. Apple down, a rare down week for them, and Tesla underperformer out of this group, down 5.5%. So overall, up 0.6 as a group is not much of a bounce back from some of the damage that's been done the last couple of weeks, but it is a step in the right direction. As far as our industries, okay, this was Friday, which was a good breath day, but yeah. So week to date, you could see for the week, okay, utilities were up big outperformer. They're sort of like a defensive industry. And then basic materials were up. They've been running with the, as the tensions have escalated in Eastern Europe. The rest of everything kind of was along the flat line, mostly. Tech flat, services flat, industrial healthcare, all this stuff is flat. So breadth overall was not, it's not good or bad one way or another, but you did have sort of these two outlier sectors that were up big. But it's good that there were no sectors that really got smoked on the week. Okay, as far as subsectors, nuclear was up. Nuclear had a big run, 15%. Okay, tankers and solar, big bounce backs. We've got a couple, okay, so 1, 2, 3, we've got 8 sectors that are up over 5%. We've got 2 sectors that are up, over 7%. But So we did have some sectors that were showing good, good strength overall. On the downside, okay, cannabis sector down 5%, and that's the only one that's down 5%. The rest of them, um, well, 4.5 is close on data storage, but even Chinese burritos, being the third worst sector, is only down 3.8%. So you could see that by the end of the week, a lot of sectors had sort of, whatever damage had been done throughout the week, it basically was sort of negated in the last in Thursday and on Thursday and Friday, which um, sort of makes the overall week look pretty decent. Although with everything being so sort of fluid with how it's developing with the war and everything, it's hard to sort of gauge um, what the risk on or risk off mode is going to be, given that the appetite to take risk is obviously going to be much less overall, without something that gives people a little more confidence than what they've seen. So you see the market sort of hangs on all these headlines every every minute of every trading day, and it sort of becomes a crapshoot. As far as how we looked on our cap weighted breakdowns, so 1 to 5 billion up 120 bips, pretty good. 5 to 10 billion up 1%. So I mean, even these, we say Russell was up 1.38%. So plus 90 bips for 10 to 50 billion, and plus 115 for 50 to 100 billion, and the Terra caps up 0.5%. So that was kind of in line with the leadership watch list that we looked at. So all green across the board for all of these, which is good. Nothing really stuck out as far as any sort of pattern. I think everything underperformed. These were, everything underperformed the Qs and the Russell, because those were up, about 1.4%. Highest one we had out of these was, I think, 1 to 5 billion was, 1.21 was the highest that we had out of these. So I don't really know what to make it. Don't really know what to make of that. Let's check out the coming week and what sort of the breakdown is. I think this is the first time this has happened on here. So Stocklabs intelligence algorithm has not a single ETF rated as bullish for this week. Now that's based on the parameters that I have here, so we have to have at least 6 readings. It has to be up over 65% of the time, so at least 2/3 of the time, and then it's got to have return over 4%. I can flip this and less than. Okay, so on the inverse side, this is okay. So FANG is, so this is a bullish ETF. It's rated bearish, which is bearish for that sector. So FANG stocks are bearish this week. Cannabis sector is bearish. Oil and gas is bullish. So this is a bearish ETF, rated bearish. Double negative is bullish. I don't know what this BitQ is, but it looks like bearish crypto. Robotics ETF is bearish. ARK is bearish. South Korea is bearish. I mean, this is not looking promising for this week. But we'll have to, and coupled with the fact that not a single one of the uh, bull ETFs were rated as bullish, although it doesn't have any bear ETF. It's kind of weird that zero things would show up on this, but if you just invert the parameters, you get some stuff populating the fields. But yeah, okay, so this is, I would probably have to advise some caution this week just because of how big of a rally we had at the end of the week, coupled with how much I kind of hate the word uncertainty, but yeah, there's a lot of uncertainty with the market. We also are pretty close to overbought on our main algorithm here, and these overbought signals have sort of been a death sentence for the market, at least recently. So that's something to really watch out for on here. Okay, we don't have any 12-month overboughts, but we have 3 and 6 month overboughts. That, yeah, I mean, these have not boded well for the market when they've hit. So we're very close. Very close. When we almost actually got one. Almost got one at the end of January. We're pretty close here at the end of February too. So we'll just have to see. Yeah, maybe if you were looking for a place to sort of exit some positions, you got a little bit of reprieve end of last week, and you might do it on any additional strength. Or, yeah, I don't know, just you might consider carrying some more hedges, the next several days or week or whatever. I know that's kind of the approach that the Fly has taken for the most part. But yeah, we'll see. Should be an exciting week. February the month of February ends on Tuesday. I'm just guessing Tuesday. And then we'll be into March already. And March, I think, is okay. It's a generally bullish month, which could be good. For all of us. February was soft. I mean, again, seasonality is not great in February, and sort of played out that way. Obviously, to a larger degree than just flat or down 1 basis point, but at least once we're into March, we sort of have a little more of the historical seasonality on our side than what we have for the past month. Okay, so that's all from me, and we'll talk to you guys later. Good luck.